Prepare to lose all your money investing in cryptocurrencies. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this article from MarketWatch. Prepare to lose all your money. Regulators' blunt warning on Bitcoin and other cryptocurrencies. Now, in some ways, this is a bit of a clickbait article, but it also is a good warning message. Now, before we go through this and through the actual warning, I want to draw your attention to a video I did a year ago, the Cloud Token Ponzi scam. And notice how 3 days ago, Cloud Token Cloud 2.0, there's new, it's going again. I released a video about this Ponzi scheme, and, well, I got threatened. Here's the company. I found that it was registered in Launceston. This is a scheme where you put your money into their magic wallet and their AI bots would trade it on Binance, and you'd get a daily return, a daily interest. It's a complete Ponzi scheme load of rubbish. I found that the website was registered before the actual business. They were using an Australian ASIC registered business, Cloud Technologies and Investments Proprietary Limited, based in Launceston in some guy's house, to give it legitimacy. They had the app on the Apple Store and people were putting their crypto in. I did a video on it, debunking it, showing how it was, why the hell would you start up this Malaysian-based business in Launceston, of all places? Don't get me wrong, I like Lonnie. It's a beautiful place. Bit too cold. They've got great beer down there. Tasmanian beer just beats us. And if you're watching from overseas, you know that, what is it, Foster's? We don't drink that shit. That's a joke. I don't know why they put that in bloody Croc Dundee. We don't drink it. They've got some nice, good beer down in Lonnie. So maybe that's the reason. So I'm tweeting at this idiot who's running at the master. I ended up getting a letter from an Australian lawyer threatening me to take it all down. So I'm waiting to go to court, myself and YouTube. So you know what I did? I wrote a whole big response in case I had to, addressing all of their issues, which is probably a waste of time now that I think about it. I might turn it into a video, but I just whacked more ads on this video, like a crazy amount. Not even, people are thinking YouTube puts a lot of ads on stuff these days. I went overboard. I probably put too many on there, but just because I was getting all the cloud token suckers were coming in and pouring hate on it. And I mean, you got all the comments here of people, saying, oh, it's going good, or I'll make all my money. It's all bullshit. So I've looked at this before, and this is what they're warning about here. So you're not going to lose all your money if you're in Bitcoin or if you're in something legitimate, but it's in the things that offer you the insane returns, like even 0.5% a day, 1% a day. Those are insane. That doesn't make sense. And no one has an AI trading bot that can automatically make millions. They just need money. If they could do it, it would just exponentially grow. And why the hell would they give that away? It's like all these people who sell you the courses online to make a fortune. Get into property, make a fortune. Do drop shipping, make a fortune. Do this. This student made $100,000. He'd never done it before. $100,000 in revenue, perhaps, or turnover. How much profit did he actually make? The meta is the actual money to make money, or the actual way to make money is to sell courses on how to make money. That's a scam. So let's have a look at this, guys. Let's look at this article, because if you're invested in one of these things where you get a monthly or daily payment in crypto, and often it's in another token that's unrelated to what you're putting there. So you deposit your Bitcoin, like you would in this Ponzi here, the cloud token one. You deposit your Bitcoin into their system, or your Ethereum, or whatever other token that accept USD, and it becomes a Ponzi scheme. You're meant to get this payment. Here's their website. They had it on it. I think that they took off that it was an ASIC registered company. Arbitrage system. The Jarvis expert advice. Yeah, I mean, so it's meant to be this magic system. Have you ever done arbitrage, guys? Where you take advantage of the differences between exchanges? I've actually tried it. I tried it. Remember when there was all these issues in Zimbabwe? I took some crypto from a exchange overseas and transferred it there and then sold it for a fortune, for much more. What do you think I could do with it? Not a bloody thing. I couldn't get to get the money out of it. I had to flip it into another token, then send it back. So I lost all the money I'd made and all the fees and charges. It was quite funny, a valuable lesson. So I'm skeptical about these type of things. But anything that offers you this automated just return for just depositing, I'm quite skeptical about it. You know, be wary. People are saying they're lending out crypto. Who are they lending it to? What are they lending it for? You know, you can, with all the decentralized finance, fantastic. You can put your crypto up to borrow another crypto. So then it just becomes a circle where people are using it to pull money out of, you know, a staking token for something else. Where's the actual real economic activity? Is anyone borrowing this stuff to invest in a business, or to buy shares, or to leverage on something else? Or is it just a self-fulfilling circle where there's just, you know, worthless tokens being used to prop it up? You're getting paid in their cloud token. I think that's what it was. They were getting paid in their cloud token. And now no one can get their money out anymore a year later. And look, they're starting up number 2 and other things are happening. I haven't even looked at it. So that's why I'm skeptical of it. You got to be careful. So that, you know, they're not talking about just Bitcoin. I can't imagine Bitcoin going to zero. There's always going to be some interest and demand and utility for it. I'm just frustrated that my tokens are getting, you know, costing so much, because I'm not invested in Bitcoin at the moment or any cryptocurrencies right now, but I'm earning it. I get library tokens, I get Brave donations and Brave payments. So, you know, I get that. And my strategy this year is building my passive dividend stack in US shares. So I'm flipping all of that over into currency so I can buy shares in companies that'll pay dividends. That's the strategy I'm doing this year. I'm not let's just say the excitement of crypto shooting to the moon and going up and down, it's just too much for me. I'm not really in that zone right now. I want nice, boring. I'd be much happier with just getting a boring little bit of money every month, not worry about it. So that's my strategy. So I'm moving crypto around, and I'm getting frustrated at all the transaction costs I have to pay moving it from one to the other, to here, which some people who just buy and hodl may not even notice, may not appreciate. And that makes me question the utility of it for day-to-day transactions. I'm skeptical of it in that regards. You know, that's. I'm even frustrated with tapping the credit card if I have to charge a fee. So let's keep going. Let's have a look at this article. The UK's financial regulator on Monday issued a very blunt warning about the rise of Bitcoin and other cryptocurrencies. Well, not really. We'll go through what they're talking about. If consumers in these types of products or invest in these type of product, they should be prepared to lose all their money. Now, that's not what they're talking about here. They've taken them out of context, but we'll have a look at that. The warning was prompted by firms offering investments in crypto assets or lending or investments linked to crypto assets that promised high returns, the Financial Control Authority said, like the cloud token wallets, guys, like the BitConnect. Remember good old BitConnect? The regulator said it had 5 concerns: consumer protection, price volatility, product complexity, charges and fees, and marketing material. There is no guarantee that crypto assets can be converted back into cash. Converting a crypto asset back to cash depends on demand and supply existing in the market, the regulator said. And that's we're never going to have a decline in supply for the big ones. So if we look here at CoinMarketCap or liquidity, I wouldn't be worried about the liquidity of your Bitcoins, your Ethereum, your USD, even your XRP. The liquidity may drop depending on this court case. But the top 10, you're going to definitely have some liquidity here. But you've got some really, worthless coins there. I mean, here we go. Ontology Gas. I don't know what that is. That's ranked 2000. What's the liquidity here? What's the market cap? Volume. Oh, well, no. Sorry. That's fantastic. 16 billion. Let's go. How can we filter it? Oh, wait a minute. Oh, only 100. I want more than 100. I want to see the really low ones. What about Groestel coin? This is one I used to mine back in the day. What's the liquidity? 24-hour volume is $8 million. So you're getting, that's the thing. You want to make sure what you're investing in has a significant volume that you're going to get it back. But you got some shit coins, guys, that have got no volume at all. Hardly anything. When the further down you get in the crypto. Now, if you're buying what's the BitConnect one? Is that still around? Let's have a look at that one. What's it? Bit. Nope, it's not here anymore. Okay, well, I mean, think of all those people that got paid in the BitConnect tokens. What would be the value of those right now? Absolutely nothing. And this is the risk, is if you buy into these payment platforms that promise you a constant interest, but they're paying you in a token that could essentially be worthless. The only utility of that token is getting the interest on that platform. And that's what happened to BitConnect. It all became worthless. So the market cap of Bitcoin and other cryptocurrencies topped 1 trillion last week, according to CoinDesk. Bitcoin over the last 12 months has gained 330%. So let's jump here. Let's look at the actual warning from the FCA, because they're not warning you about Bitcoin, guys. They're not warning you about Ethereum. They're not warning you about the big guys. They're warning you about the little dodgy scams that you need to keep your eyes out. Crypto is no different to anywhere else, any other investment. If it sounds too good to be true, it probably is. So the FCA warns consumers of the risk of investments advertising high returns based on crypto assets. The FCA is aware that some firms are offering investments in crypto assets or lending or investments linked to crypto assets that promise high returns. Investing in crypto assets or investments and lending linked to them generally involves taking very high risks with investors' money. If consumers invest in these type of products, they should be prepared to lose all their money. As with all high-risk speculative investments, consumers should make sure they understand what they're investing in. A lot of them don't. The risks associated with investing and any regulatory protections that apply. For crypto asset related investments, consumers are unlikely to have access to financial ombudsman services or the Financial Services Compensation Scheme if something goes wrong. Consumers can find out more about which crypto asset activities the FCA regulates in this note. Consumers should be wary if they're contacted out of the blue, pressured to invest quickly, or promised returns that sound too good to be true. Visit the FCA's Scam Smart page for more information on how consumers should protect themselves from fraud. And I reached out to ASIC, to the Australian Federal Police, to the ACCC to warn them of this cloud token Ponzi scheme that was using an Australian business to legitimize themselves. What response did I get? All I got for my efforts in consumer protection were threatening email by a lawyer. And what really got me pissed off was the fact that the email from the lawyer said, "Beware of scams," in their email, in their footer. Brilliant. That, there you go. I mean, you've got to understand lawyers are just there to fulfill the needs of their clients. Then they don't care if they're doing the right thing or the wrong thing. Should they be considered a profession, guys? There's a question for you. Or mercenaries. Firms, don't get me wrong, I like lawyers. Just some of them pissed me off when that got me so angry. They were literally defending a scam that was stealing from people, and they were warning people in their emails, telling me to stop, to avoid scams. Firms offering these products should make sure they comply with all relevant regulatory requirements and are authorized by the FCA where this is required. Since the 10th of January 2021, all UK crypto asset firms must be registered with the FCA under regulations to tackle money laundering. Operating without a registration is a criminal offense. So what are the risks? The FCA's concerns about high return investments based on crypto assets include consumer protection. Some investments advertise high returns based on crypto assets may not be subject to regulation but beyond anti-money laundering requirements. Price volatility. Significant price volatility in crypto assets combined with the inherent difficulties of valuing crypto assets reliably places consumers at a high risk of loss. Product complexity. The complexity of some products and services related to crypto assets can make it hard for consumers to understand the risks. There is no guarantee that crypto assets can be converted back into cash. Converting a crypto asset back to cash depends on demand and supply existing in the market. I mean, just remember when it all went, I invested in some IPOs that are now completely worthless back in 2017, 2018, all gone. Actually, let's have a look. One I invested in is probably gone. Nope, Envion, here we go. I put some money into that. Yeah, it's delisted now. It's gone. They ended up going bust. They went bankrupt. And that wasn't a smart one. But then again, I'm not talking a lot of money. Some people put their whole house and stuff in here. I just had a bit of a player with stuff I mined. But in that regard, it was probably a really valuable lesson for me to, well, until I got the mining power bill. Mining isn't, I don't think it's viable in Australia. It's just too expensive. At least with the consumer-grade graphics cards and rigs I had set up, I wasn't really doing it properly. I think it becomes a hobby for a bunch of people. So charges and fees. Consumers should consider the impact of fees and charges on their investment, which may be more than those for regular investment products. And marketing materials, firms may overstate the return of products or understate the risks involved. Consumers should be aware of the risks and fully consider whether investing in high-return investments based on crypto assets is appropriate for them. They should check and carefully consider which are the crypto assets involved. So there we have it, Rachel, everyone. There is the risks and the concerns associated with, coming from the FCA. So, market watch, sure, prepare to lose all your assets. But remember, fundamentally, if it's too good to be true, guys, it probably is. Just keep that in mind. Thanks for watching. Let me know your thoughts and opinions. Have you been caught by one of these scams before? Or have you had friends that have tried to sell it to you and you tried to explain to them, guys, it's not good. Get out of it. Anyway, guys, thanks for watching. Like, share, subscribe to the channel. If you're a fan and enjoy the content I cobbled together here, there are a few ways you can support us. You can join us on YouTube or Patreon. Support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone, and I'll see you next time. Bye for now.